Hello everyone and welcome back to the Emperor BTC YouTube channel. Today's video is another market update video and we've got a packed session today as it's a fresh month, fresh quarter and a couple of important shifts on the charts to cover. So we'll start with a quick breakdown of the last trade setup, how it played out, key levels hit and what that tells us about the market's intent. Then we zoom out. We've just closed Q1 2025, a major quarterly and monthly candle, plus the first big options and futures expiry of the year. I'll walk you through the CME chart and lay out the levels I'm watching for April, both from a spot and leverage perspective. After that, we'll look at something that's been under the radar, Bitfinex BTC USD longs. I'll explain what it's signaling right now and how I interpret that in terms of smart money positioning. And finally, the question everyone's been asking, when alt season? We'll look at BTC dominance, how this cycle has played out differently, what's been propping Bitcoin up, and when I think altcoins can actually move again. So with that out of the way, let's get into it. Alright, let's kick off with a quick recap. In our last update, the idea was a rejection from the 87 to 88k region, and if that played out, we expected to move below March's monthly open. That setup played out perfectly, price ejected right where we expected it, right around that 100 EMA, and we saw that drop under the monthly open shortly after. Now, the bigger picture. We've been tracking the idea that Bitcoin is forming a summer range very similar to how price moved in mid-2021 during the run-up to the previous all-time high at 69k. That 2021 fractal is still on the chart and is playing out in structure, timing and sentiment. The rejection at 87 to 88k looks like our first tap of the range highs, just like we saw in 2021 before months of sideways chop. From here, I'm anticipating a slow move back toward range lows, and I think a sweep of the 80k level is very much on the table. Let's look at how that could play out structurally moving forward. Let's move into the higher timeframes now and break down what I'm seeing from a top-down perspective using the CME chart and some key levels. There's one behavior that has shown up consistently across Bitcoin's history through the pre and post CME era and even now in the ETF environment, and that's a tendency for price to bounce hard from retests of previous all-time high zones. In every major run-up, BTC forms a sequence of new highs in quick succession, but what's more important is how it forms distributive or reaccumulation ranges near those highs before significant corrections. The tops of those ranges, they become key bounce zones on any retest, and you can see that clearly on the current chart in May 2024. We got a sharp reaction at this level, and then again in August, we SFP'd that exact same area. This sort of price action, you'll find it in every cycle. It's one of the more reliable structures that's carried over, regardless of the macro regime shift. So, if we get a strong sell-off into this zone, I'll be a heavy buyer throughout April and May, particularly in the 73k to 76k region. That area aligns perfectly with the top of that previous accumulation range, and I expect it to serve as a strong base if retested. Zooming out, I believe Q2 is where we transition away from this ranging environment and start to see at least a slight trend shift upward on the higher timeframes. Based on the range fractal we covered earlier, my base case is this. We spend some time under the Q2 open, which is roughly 82.5k, and then reclaim it with solid spot volume. If that happens, if we dip below, consolidate, and then reclaim 82.5k, that's my trigger to go long heavy. The main target for me over the next 4 to 6 weeks is that 92k to 93k region that lines up with the previous quarterly open and also matches our previous range lows, a strong confluence area where I'd look to scale out or reassess. There's another thing worth noting on the higher time frames, something I always pay attention to, and that's the monthly sweeps. We've just had a bullish sweep of February's low. And usually, when you get that kind of sweep on the monthly chart, it plays out really well in the weeks that follow. So, again, we are seeing a structure line up with what we saw during the 2021 run and even the summer 2024 range. That's why I expect April to be a bit choppy, but a transitionary month where we slowly shift away from this downtrend into something with bullish potential. Next, we've got these weekly areas of interest. And what's interesting is how they align almost perfectly with our quarterly opens. This is where we get high confluence zones, not just one time frame saying, watch this level, but multiple overlapping signals saying, this is where trades will be made. When we flip on the volume profile, you'll see something even more obvious. Since we broke out from the 2024 range highs, volume has clustered in three major regions. These are what we call high volume nodes. These high volume nodes mark exact zones where we look to take action. Long on strong bounces or flips, or short on rejection or SFPs. And just to add another layer, the Fibonacci retracement from our October 10th higher low till the all-time high shows a clean 61.8% level at 78.5k. That's huge confluence. We now have a daily level, a fib level, and a volume node all stacking up between 79k and 75k. This is the zone where I'll be heavily accumulating spot from 79k all the way to 75k. For leverage setups, I want more confirmation. The safer play is either a sweep and a reclaim of this zone or a Q2 open reclaim with volume like I mentioned earlier. Finally, looking at the volume profile of the current range, we can also see where intraday and intra-week trades can set up. These levels give us a clean map, range extreme to range extreme, and then watch for the flip or rejection of either side. If we hold the value area low, that's long setup territory. If we reject and fail to reclaim the value area high, that's a short trigger. Simple level to level trading until something breaks. So that's the full top down view. We've got monthly context, weekly context, volume nodes, and clean fib structure, all pointing to the same zones. April might be choppy, but it's setting the stage for the next big play. Let's shift focus to something most traders overlook, the Bitfinex BTC USD longs metric. Now, this isn't a metric with high daily impact. The size is relatively small compared to derivatives open interest or large spot volumes, but what makes it powerful is how relentless these flows are. Bitfinex doesn't trade like a typical retail or even institutional desk. Instead, they build positionally, and more often than not, they're buying into weakness and selling into strength. Let's go back to the 2021 all-time high from October 2021, right as BTC topped. Bitfinex started accumulating longs and didn't stop for almost a year. They added a total of 82,000 Bitcoin to their long exposure through the entire bear market, buying the dip all the way down while everyone else capitulated. Then, in early 2023, just as the market began shifting into bull mode, they started unwinding those longs gradually and fully exited their 82k BTC position as the bull rally picked up steam. Fast forward to March 2024, When BTC first rallied above 70k and printed the first all-time high of this cycle, Bitfinex started buying again. They built up another significant long position through September, where we bottomed in August, and then started selling that stack as BTC rallied to new highs. Now, here's where it gets interesting. They've been buying again since December. Quiet accumulation all the way through the recent pullback. And as of today, Bitfinex has nearly the same level of long exposure that they had in September, right before we confirmed the previous cycle bottom. It's not a trade signal in itself, but when this kind of accumulation lines up with key technical levels, volume zones, and macro structure, you have to take notice. So while everyone else is panicking about chop, smart money is doing the same thing they always do, quietly buying when it's uncomfortable. Let's wrap up by talking about Bitcoin dominance, probably one of the most misunderstood metrics in crypto. For anyone new here, Bitcoin dominance represents the percentage of total crypto market cap that belongs to Bitcoin. So, if the total market cap is 1 trillion and BTCD is at 62%, that means Bitcoin alone has a $620 billion market cap. Now, let me be clear. I don't believe in doing technical analysis on Bitcoin dominance itself. It's not a tradable chart in the traditional sense, but history does tend to repeat. And from that lens, I think 71 to 72% dominance is the level to watch. It's not out of reach at the current rate. Since the 2021 top, we've now gone over 2,500 days with BTCD slowly trending upward. That's already way longer than previous cycles where Bitcoin dominance typically topped out within 2,000 to 2,100 days from the previous peak. What's changed is simple. Bitcoin is getting serious institutional flows from ETFs, corporates like MSTR, and long-term spot holders. Altcoins, they haven't. In fact, the altcoin landscape has gone from a few hundred projects to millions of tokens, most of which don't hold any value. So while people keep waiting for alt-sizing, what's actually happening is Bitcoin gaining mindshare, liquidity, and dominance. Yes, we had some anomalies like November 2024 where BTCD briefly dipped, but in the broader context, that wasn't even a significant correction. And that's why my focus is clear. I'm scaling heavier into Bitcoin when we get our trade setups, not spreading out across 100 altcoins hoping one moonshots. The truth is, for the last 2,500 days, altcoins as a sector have been bleeding against BTC. That's not a trend I'm trying to fade. It's better to wait for the trend to change than to try to predict the exact top in BTC dominance. Alright, that's it for this update. We've covered the last trade setup, the monthly close, deeper positioning insights, and why Bitcoin continues to lead the market. April is shaping up to be a transition month, so stay sharp, stay patient, and keep playing level to level. Thanks for watching. Drop a like if this was helpful, subscribe if you haven't already, and I'll catch you in the next one.